It continues to be a big week in the markets as far as earnings go. We are seeing McDonald's having a strong earnings report. Forward guidance, not great. First Republic, another big dump today. They are just getting crushed. We will get into all of that and much more as we start up today's show. Hit that like button, subscribe to our channel. Nothing that Kevin or I say is financial advice. We are not financial advisors. We're a couple of guys who love following the markets, nerding out on this stuff. So please do your own research before you perform any buys or sells. Kevin, we got some more data out today around the housing market. We have some more earnings. Where do you want to start first?
Let's go to earnings.
Okay, we'll go hit a few earnings. One of the big ones this morning was McDonald's. They came in, beat expectation on both earnings per share at $2.63 versus $2.33 expected. Revenue $5.9 billion versus $5.59 billion expected. However, they are seeing a lot of challenges ahead, and I think that's going to be a theme that we see from a lot of companies is concerns about inflation and how that's going to impact future earnings. So we've seen from McDonald's, they raised prices on a lot of their items, and they haven't seen as much of a pullback in demand quite yet. However, they're expecting that to change. One positive for them is internationally, they are seeing a lot of growth as well. So I believe in Europe, they saw about 8.5%. In Asia, they're seeing around 10.5%, as China's zero COVID policy comes to an end. So that is a positive for them. But, throw out McDonald's for a second, just on a bigger picture, we are seeing some cracks starting to form in the foundations. First Republic, on the other hand, just ate shit once again. They had a very bad earnings call. The call itself lasted all of 12 minutes. The CEO just raced through it, didn't take any questions. It was not a good look. Their biggest thing that everyone was looking for was the deposits in Q1. Expectations were $145 billion. Well, they came in at $104.5 billion. So the stock is now down below $12 a share. It is down 90% on the year. I mean, that is akin to many a shitcoin that we see. So not a great earnings call for First Republic Bank. We have some big ones today. Microsoft, Alphabet are the headliners that are going to report after we get the close of the market. So a lot to look at there.
Yeah, it's absolutely insane. We looked at First Republic yesterday, and we kind of laughed when we opened up that chart and just saw this massive red candle. You were saying that it was pumping on the day, but you had to really zoom in. And sorry. And then
it got up to about $16 a share yesterday. Yeah. And then they reported, and then it just went right back down.
Nice 25% dump. Pretty sweet. Yeah. So if you were able to see through the bullshit and you shorted that, I applaud you. But absolutely insane. I don't think the best thing I feel for First Republic Bank is just obscurity at this point. Just kind of stay out of the spotlight. Just silently kind of do your thing, because anytime you have to go in front of people or pretty much present data, that stock is probably going to get whacked again. And again, we're still early in the bear market. I still think that there's a lot more capitulation to come, and the banking industry is probably not safe just yet. So it'll be really interesting to see, First Republic Bank now versus say 6 months from now, how that is trading. I think it's probably going to be a little bit lower. Again, we also had that one person in the comments one time bring up Citibank. Citibank was down like 99% back in 2008. So these things can happen. This is no surprise to me, but definitely no bueno for First Republic.
Yeah, not at all. Another piece of news that came out this morning, and this goes along with the concern we have around the jobs market. 3M laying off another 6,000 people. That brings them on the year just under, I believe, 9,000. I think they're close to 9,000 layoffs this year, about 10% of their workforce, as they try to tighten things up. They've seen a big decrease in revenue, so they're trying to, improve the balance sheet. And this is not, these layoffs have been, trickling in, and it's only a matter of time. If inflation is as persistent as a lot of these companies are expecting, and they're going to see revenue drop, employment's going to have to drop as well. They're not going to need as many people. They have a fiduciary responsibility. They're going to need to try to increase the bottom line, and reducing the amount of salaries is one way to do that. And that's going to be the preferred method for a lot of CEOs moving forward. Yeah. So I think that is just another domino that is falling. and we still have many more to go.
It sure shows too that. Oh, sorry. It just shows too that this is way beyond just the tech sector. Like we're going into manufacturing. No job sector right now is safe. Like I will go on record saying that, we've been saying it for weeks, months. There is no way that any of these industries are safe from what's coming. And again, I expect this to be a pretty nasty recession when it finally does hit. But people are going to go lean. And unfortunately, people are going to lose their jobs. And it doesn't matter where you are. So if you're, sitting here right now feeling comfortable, maybe, be proactive, think ahead, because I don't think anyone's safe, in my personal opinion. Maybe healthcare. That's about it. But everything else on the table.
Healthcare is usually a pretty safe one. But yeah, it started with tech. We're seeing it into manufacturing. Financial. We're going to see it in retail soon enough, financial. So it's happening. And you add AI into the equation.
Oh yeah.
And it's going to, it's going to compound even more. So strap in. If you have one of those jobs that is, you're in the crosshairs, like please get your, I have hope for the best, but plan for the worst is like the best thing you can do right now. In my opinion, like if whatever you got to do to prepare yourself for the worst case scenario, be smart with your money. Like we've said over and over again, like it is time to cut expenses. It's time to, like a lot of these companies go lean. And if the best happens and you continue to have your job, then that just means you got more cash on hand to buy the dips and accumulate more assets and grow your wealth in the years ahead, because it's going to be rough for many people, unfortunately. But for those who are prepared for it, there's going to be a lot of opportunity. Speaking of that, we saw the new home sales data came out this morning, came in at 683,000 for March versus 623 expected. So almost a 10% higher than expected right there. That's on the backs of improvements in mortgage rates. New home builds have been increasing as supply chain has been improving as well. So, if you remember back to 12, 18 months ago, like new homes couldn't be built because lumber was so insanely expensive. Those expenses have gone down considerably. Supplies have gone down in price. So we're starting to see that happen. Do we continue to see, that number increase? Maybe we're heading into the time of year when people, this is the big home buying season. Yeah. So we'll see what that means. And then the home price index came in at 0.4% increase, which is right as expected. So the housing market looking pretty strong right now. Will we see that continue to be the case as interest rates go up and stay elevated and debt is at obscene amounts? I believe I sent you, this morning we saw a really not great piece of data stating that more than 1/3 of Americans now have more credit card debt than emergency savings, highest on record. That is not a good sign. As we continue to see the rates go up, they're going up again and they're going to stay there. And that's just going to increase the amount of debt that we're going to see. So, it may not happen this month, next month, the month after, but it's going to go down eventually.
I had to pay my credit card bill this morning. I paid it off in full. No debt, man. No liabilities. It's not the way to be going into these next few months. And again, I think everyone's kind of saying 25 basis points and then maybe a pause, we'll assess. I really don't know. I mean, if it gets really bad, those credit card bills could be shooting up with some of these interest rates. So yeah, liabilities right now do not seem like the best place to be having, debt or anything like that. It's pretty insane to think that, 1/3 of Americans don't have or have less savings than they do debt. It's just insane that you're spending more than you actually have. And that's when we get into these situations in 2008. And again, 2008, I sent out a tweet a few weeks ago. It's from the bottom up. It's everyone's fault. If you're being irresponsible with your money and you're taking on, debt, it's your fault just as much as the banks who were taking advantage of those people with some of those subprime mortgages. This is, top to bottom. And in no way when both parties, everyone in between is acting irresponsibly, does this ever play out, because it's going to catch up with you. You're going to, not karma, but what is it? You're going to have to, pay the piper. I don't know.
It's your decisions are going to catch up to you.
Exactly.
Plain and simple. That's really all there is to it. So let's move into some of the headlines. We have a big one yesterday. Coinbase is suing the SEC. I know that you said you just saw that this morning. they're trying to get clarity. I think that it's great that they're leading the charge. I'm cheering for them to come out on top here because we need the clarity. I'm Gary Gensler. It's time to go. Like, that guy is just really not bringing anything to the table. He's slowing down innovation, and it's putting, it's moving a lot of high quality people outside of the United States to focus on crypto because there's so much murkiness out there. We just don't know what is going on. They refuse to play the game in a way that is what's best for the people. So it's good to see Coinbase stepping up, leading the charge here. Did you read too much? Did you read much about like what is going on and what we can expect moving forward?
I tried looking at it a little bit beforehand. Again, this is the first news I've heard out of Coinbase since they were served that Wells notice a few months back, where usually that leads to an SEC filing a suit, but it looks like Coinbase was first to jump, and it's probably a smart move because that's always how it is. Always file the lawsuit before the other party does. Makes you look a lot better. But yeah, it's really interesting to see how that's going to play out. Again, we've seen the SEC pretty much go after everyone except FTX. And it's great to see that they're taking, let's say Luna, Celsius, all these other companies too. They're really doing everything they can to protect American investors, and I couldn't appreciate Gary Gensler more. As every fucking day passes, that FTX destroyed so many lives, and so did Luna, and so did Celsius. So clearly, getting some clarity would be good. Again, but part of me loves the Wild West of crypto. Kind of makes me miss the old days where you can kind of do whatever you wanted and obviously pay your taxes, but you can get away with transacting on different exchanges. But it's really wild. And again, it just seems like regulation is coming after this bear market. This the perfect storm for the United States to crack down on this stuff. And maybe they crack down and crypto's fine for the next 10 years or so. But I wouldn't be surprised if we see tons of these companies move out. I know Ripple Labs is definitely getting out of the United States after this lawsuit. I wouldn't be surprised if Coinbase moves somewhere else. They might just go to the Bahamas like Sam did. But it's not going to be, headquarters will not be in the United States. They will not be paying tax. They will not be giving the United States money for destroying their industry. That's what I see when it comes to that.
Yeah, I hope that's the case. I mean, that's the only way that maybe some of these people are going to learn. I think they want to continue to have control. A lot of the government is just, they're not really in the business of giving people more freedom. It seems like they want to control the money supply, control what people are doing with it, and crypto fights against that. And so they're going to try to slow it down. But you know what? It is just like Thanos. It is inevitable. So let's move on from there. I know one thing you really want to touch on is BNB and what is going on with Binance and these financing like in these rates. So I'm going to let you take it away from here because I know this is something that you're deep in the weeds with.
Yeah, absolutely. I'm going to actually share my screen for this one because this is really insane. And again, full disclosure, I do have a short on in BNB, but this is before these funding rates got fucking insane. Like, this is absolutely, insane to me. So we're seeing some of the funding rates here. It's kind of hard to see. Let me see if I could. Yeah, there we go. See if I can find it. So here's Binance. It's negative 0.0844%. And you can see across the other exchanges, it's extremely high. Like 0.01 is usually, normal. One negative or positive, that's pretty normal. It's when the funding is negative, that means that you're paying the longs to hold your position. And then when it's positive, the longs are paying you to hold your short position. But right now, it's absolutely insane. You're paying almost 9 times higher than what the normal funding rate is. So anyone holding a short position is absolutely getting destroyed just by holding that position. They're, the funding rate is just taking money, USDT or whatever coin margin that you're using, and it's absolutely taking it from your entire position. So for me, I'm looking at this and it's just like, why is the funding rate so high? And we can see across the board, everything else is pretty neutral. Coinbase 0.01. Ethereum 0.0093, almost 1. XRP 0.004%. Like maybe Matic 0.0257. You'll get that occasionally. Again, I think Matic is extremely, being destroyed right now. So maybe a lot of people are just afraid of what's happening with this. So they're entering short positions. So the higher you see these numbers in negative, that means there's more short positions that are opening. So when I see this this is just the current rates of what's going on right now. But if we go to the daily, Binance is negative 0.25%, which is massive. We go to the 7-day, it's negative 1.775%. 30-day, negative 7.6%. Just so for comparison, 30-day on Bitcoin is 0.9%. Binance is negative 7.6%. And then we go to the 1 year. Bitcoin is 10%, in the positive, while Binance is negative 92.57%. So this is something that's wild. Like, these are wild numbers. And just, to me, there's a few things that could potentially be happening. Either Binance is pretty much just, manipulating the market, and they're trying to prop up the price of BNB to, make sure that they stay afloat. Because again, they own 70% of the entire supply. So that's one, situation where they could be, propping up the market, and eventually there's going to be a short squeeze. Because the only way this plays out with current funding rates is either we see a short squeeze or we see like massive capitulation. It's one way or the other at this point. And is this similar to what happened with FTX? I have absolutely no idea. I was trying to find some data on FTX's funding rates prior to their collapse. But right now, it just seems like someone knows something with Binance, and they're just opening these massive short positions. And the price is still staying pretty solid. Like, let me see if I can go to TradingView real quick. TradingView for BNB, I think the price is somewhere around 330 BNB USDT. Let's go on KuCoin. Yeah, it's 330.57. And we can see that it's just, these rates have been piling up as it's been kind of consolidating sideways. So maybe there is a short squeeze opportunity here. But when I see how bad it's been over the past year, and people have just been building these short positions, and if we look at the past year, we could say, let's go back here to the weekly. We could say, okay, maybe some of these positions have been like open since right around here, since January of 2022. And they've just been riding this, and it's just been absolutely negative to the point where it's like someone's expecting something to happen. And in some ways, I say that maybe Binance is the one behind this, but in other ways, maybe it's someone else. And when I think someone else, I potentially think of maybe a nation that we were just talking about that is, heavy on pretty much limiting the amount of progress that crypto makes in its country. Maybe there's something that they know that they are shorting because, again, Binance owns 70% of the supply. So you wouldn't want to buy something that you think is going to go down, and something that is going to possibly go down. So am I saying that the U.S. is putting a fat short position on Binance? No, but I'm saying that it could be a possibility because, again, you're borrowing from them to sell and then hopefully buy at a lower price. Would that be an insane story? Possibly, but I don't think it's out of the question that someone huge or some investor will know that something bad is going to happen with Binance. I just don't see this being, this doesn't make sense in the context of everything that's going on right now. We're seeing all these other coins pull back significantly. Binance is holding somewhat strong, but then the funding rates are extremely negative, while everything else is either pretty positive or it's, just a little bit negative. So there's something definitely crazy going on here. I don't know I haven't heard a lot of people talking about this, but I am not seeing something, that's screaming, oh, this is going to be fine long term. Either we're going to see a massive short squeeze where tons of short positions are liquidated, or we're going to just see absolute Binance go to zero. Like, that's the two situations I see, the two realities. And, that's all I got in terms of what I've seen on the charts. Is it possible that, everything's going to be fine a week from now? Sure. This could be absolutely play out for a while. We've seen how long these funding rates have been for the past year. But if this tends to be the next exchange to go down, whoever's got these short positions is going to make a fuck ton of money. Like, this is just insane how negative these funding rates are. Like, I'm baffled every 8 hours when I see that it's still high. Like, for the past 2 days, it's been 0.09%. I've never seen that before, where it just won't go back to like net neutral at 1 or -1. This is just absolutely idiotic, chaotic. So I'm really interested to see how this plays out. Like I said, I do have a position, and I'm just like, fuck it, let's see what happens. I definitely think that the Binance BNB coin is something that you can hit because, again, can the United States hurt Binance from where they are? Not really, right? Binance is international. They're not even based in the U.S. If you're going to go after Binance U.S., that's just an American company that uses Binance's tools. It's not really going to hurt anybody. But you can go after one thing that is international, and that's their token. And if you hurt their token, you hurt their supply of 70%, you're going to hurt their liquidity. That thing could go absolutely under really fast. Again, we saw that very similar with FTX. So if that's the case, that's the most nefarious case that I can present. watch out. That could be something really bad for the entire space. But again, could this be Binance? Yes. Could it be the U.S. government? Yes. Could it be Justin Sun? Yes. It could be really anyone who's building these positions. It could be assholes like me who just expect this price to go down. But I think that there's definitely something a little bit more sinister at play, and I'm definitely here to watch this play out.
This is going to be very, very interesting over the coming weeks, months, to see what goes on with BNB, because if that really, if some of this comes to light, that it is one of these huge, whether it's the US, whether it's we're just speculating here. Yeah. Like we have no insider information. Kevin's just going off of what he sees on the financing rates and on the charts. So very interesting. We're seeing, crypto is pulling back today. We're Bitcoin. The only three things I see in the green right now on TradingView for my watch list is Bitcoin dominance, the DXY, and the VIX.
Yep,
that's it. I guess Apple just is kind of flat now. Same with Tesla, but those are the only things that are noticeably green right now. Bitcoin dominance on his way back up. We talked about it last week. If it goes down, the prices don't have to go up for dominance to go up. They just need to go down for Bitcoin less than everything else. That's what we're seeing play out at the moment.
And that's what we talked about too. Like you're saying that it was going to come down, and then for the next leg to the upside, if Bitcoin dominance climbs with everything, climbs with the price of Bitcoin, everything, every alt's destroyed. I'm sorry. That's just the way it's going to happen. And we've seen it's consolidating here, and it's growing strength right now while Bitcoin's price is coming down a little bit. So it'll be really interesting to see how this plays out when we do get that corrective wave. But I don't know. I don't think alts have any air left in them. I think that everything's been knocked out by Bitcoin and Bitcoin dominance. And it's maybe I wasn't stupid to open up a short position. Maybe I was, but I don't think that these alts are gonna have any room to the upside. And if they do, it's gonna be very limited.
Yep. It's all, we saw that local top. We've seen the cycles take place of Bitcoin running, then ETH, and then alts for a few days. And now we're seeing, meme coins and rug pulls and all this other shit. It's time for it to come crashing down. We'll take a look at BTC dominance real quick, and then we'll wrap it up for the day.
Yeah, absolutely. Again, this is, we were talking about this consolidation period. We saw it down here, and like I said yesterday, like this has not given me any sign or indication that it's going to go down. I have not given up on Bitcoin dominance. It's slowly creeping its way up. We got tons of room on the stochastic RSI if we're looking at the daily. And again, the weekly, we all know that the weekly can play out for a period of time. We're coming out of the overbought. Doesn't mean that we can't just come right back into it. We saw it here, came back in. Wouldn't be surprised if we came back into it and we make one last push up to this yellow line, which is the 200 EMA, before we get rejected. Because again, I think we are still in a bear market. So if Bitcoin dominance does climb up here and this 50 doesn't cross with it, you're going to see the price of Bitcoin most likely go to the downside. And if we look at the daily real quick, just want to point out again, these are two different charts right here. I mean, these are two different structures right here. This is before we saw massive capitulation, and this is where we are now. But again, we saw some of that consolidation on the way up too, right here. Not nearly as strong as it is currently, but I do think that Bitcoin dominance is going to continue to climb. I know a lot of people don't like that. That doesn't fit their thesis. I don't care. I think that this is just the play that we're seeing right now, and I do expect Bitcoin to make a little bit of a relief rally up to that $28,000-$29,000 range. And once it does, I think Bitcoin dominance is going to climb with it before we see pretty much complete breakdown towards 25 to 22,000, and then maybe get another relief rally before we get the final dagger, which is pretty much lower lows. So it'll be really interesting to see how this plays out. Again, I'm saying that this is probably going to be the top of the next rally where we see Bitcoin dominance at its height. I don't think it's going to play out too strong in the coming months after it. I think it's going to come down eventually as the price of Bitcoin and alts do, liquidity is drained from the markets, whatever liquidity is left in the markets at this point. And then we're just going to see absolute blood. Like, I don't think this is going to go up or down. It won't go up for sure. I think it'll come down a good amount. But this is something that short term, Bitcoin dominance is probably going to go to that 51%. That's my target. Could be a little bit less than that, but it's definitely going to go up from here. But over the next few months, I definitely see, this playing out to the point where Bitcoin is just going to keep bleeding out, and alts are just going to bleed even harder.
All right. Nothing has changed on that front. We will see how this plays out. Like I said, we see a lot of data coming out this afternoon. Earnings, Meta, or no, not Meta. Meta's tomorrow. Microsoft, yeah, now it's Facebook. Microsoft and Alphabet are this afternoon. Tomorrow morning, we have durable goods orders, retail inventories, and wholesale inventories. So we talked about manufacturing and retail jobs. Let's see what those numbers show as well. That'll paint a little bit, more clear of a picture of how things are playing out in that area. It's going to be a lot. I mean, this is one of the craziest weeks of the year as far as the economic reports and the earnings reports. So a lot to talk about. It's exciting. Market isn't doing anything too crazy quite yet. Still pretty boring, but that has to change eventually. It can't continue to move sideways like this. So we'll be back tomorrow. Appreciate everybody for watching. If you have not yet, please hit that like button, subscribe to our channel, drop a comment. We really appreciate all that stuff. If you enjoy our content and you want to share with other people, that's fantastic. So like I said, we'll be back tomorrow. Thanks everyone for watching. We will see you next time.
Take care, everyone.